Good morning and welcome back to my channel. First off, I want to say I am not a financial advisor. So this video is being made for entertainment purposes only. And this morning I'm looking at the ARKK Innovation ETF. And this is one fund that I wouldn't touch with a 10-foot pole. And I don't mean to say that mean or anything, but what you're doing is you're buying an ETF that is totally based on speculation. There's a lot of these companies are startups, they're small companies. They're supposedly supposed to disrupt the industries that they're in the next 10 years or whatever, or 5 years. You know, most of these companies will probably be disrupted. And some of them, you know, I mean, they could be struggling a year or two from. They're struggling now, but let's just go look at Tesla for a second. Here's one. This was her darling stock that they came out. And if you look at every single holding of their top 10 holdings in the ARKK ETF, basically they've all peaked at about the same time, and they're all down from their highs that they were once at. And that is because they came out and hyped this. They pumped this stock. They came out and she went out and picked these stocks, put them in her fund, and then went out on CNBC and on these other channels and really hyped these things and got a bunch of people fired up, and they came in and pumped their money in these. And just for example, Tesla, you know, it hit its high, in January? It hit a high of $900, but today it's trading at $621. That's down about 27 to 28% from its high. That is not good. And it's not coming, I don't believe that one will ever come back to 800, let alone 900. So that's just one of the stocks in that ETF that is down, and that's their biggest one. Now, they have in their portfolio, 10% of the ARKK ETF is a Tesla stock. So the next one is Teledoc. And when you look at Teledoc had a high this year of $308 per share. Today it's trading at $155. That is 50% down from its high. That is not good. Okay, today. So that's just another. A little over 6% of the portfolio, 6.09% of the portfolio is in Teledoc stock. Now we come to their third holding, Roku. Roku topped out this year at $486 per share. Today it's trading at $395. That's still down quite a bit. That's still down, what? Is that close to 20% down from its all-time high? Very bearish. Okay, that's their third holding, and Roku makes up 5.71% of their portfolio. Now we go to Square. Square at one time was trading at $283. Okay, and it's down about 30% because it's right at 231. No, not 30%. That would be about 20% down. So I mean, that one isn't too bad, but it's still, you know, it's down big time, you know. So you got Square. Square makes up 4.65%. Then you got Shopify, which it doesn't even show up on my list for trades. So that's because it's outside of the country. So anyways, let's go back to their, okay. Now we got Zoom. All right. Zoom makes up 4.2% of their portfolio, and Zoom hit a high of $588 per share. Today it's trading at $375. That's down over $200. So that one's down about, that one is down somewhere around 40% from its high. Terrible. Twilio, 3.65% of the portfolio. $457 high. Today it's trading at $378. All right. Coinbase hit a high of $429. Today it's trading at 211, down more than 50%. That makes up 3.5% of that ETF. Spotify, $248 it's trading for today. It hit a high of 387, so it's down $140 per share. All right, which tells me that this stock is down about 30-some percent, 33% from its high. Not good at all. Zillow was up to $208, down to $113. You see, what has happened is when she put all these, she handpicked all these stocks. She didn't go based on an index or anything. She just went based on what she thought, you know, that they're going to do this and they're going to do that. So she came out with a hype. People bought into these, and they see her buying these, putting them in there. So the retail investors go out and they're going to try and copy her portfolio. So they go out and buy all these stocks, and the price just skyrocketed. I mean, it just went to the moon. All these different companies she put in there, and they're all crashing now. Short sellers have just, I mean, they're like, it's like a dead whale carcass that's floating out in the ocean, and it doesn't take long before the sharks find that carcass, and when they do, they all flock to that carcass and just start destroying it, you know. And that's what the short sellers have done. They just went to all these companies, to all these different companies that she picked, and they're just, I mean, they're just shorting the hell out of these and bringing all these stocks down, because none of these companies, their earnings are terrible. I mean, you look at Tesla, what is over 10% of their portfolio, has not made a single dime off of selling cars since they've been in business. That all their money has been made off of, all their earnings have been made off of regulatory credits and Bitcoin purchases. And then you got all these other companies that they have that, you know, Coinbase. What the hell is Coinbase? I mean, you know, you look at these things, and they were all hyped and pumped, and now they're nothing. I'm not touching this ETF with a 10-foot pole. I truly believe this ETF will return back to the mean and will be trading probably around $50 or $60 within 2 years from now. She'll be having to do a lot of selling inside this fund. She'll be like a damn octopus trying to hit all these buttons and levers, trying to sell these things and trying to unload these things, because when this market starts crashing, which we haven't even seen yet, I mean, we haven't even seen the massive correction that's coming yet, and this ETF is really going to get hammered when that happens. And you can come back a year or two from now and click on this video, and you will see that I'm right in my assessment here with this ETF. I know y'all don't want to hear it because you probably paid $150 for this ETF. Hell, some of y'all watching this might have paid $159. You ain't getting that money back. That money's gone forever. I suspect that this ETF might creep back into the low 120s maybe, and then it's just going to free fall from there. I don't see this thing doing much. These companies are all just barely hanging on. And as Tesla price falls, and some of these other ones like Teledoc and Roku and Zoom and Twilio and Coinbase, Zillow, all these things, Zillow especially, we're going to have a housing correction here that's going to be soon around the corner. And so I'm looking at this ARK ETF, and I'm not touching it with a 10-foot pole. If you want to invest in a good ETF, go buy QQQ. That is a very good ETF that indexes. Some of these companies that she has in here are in the QQQ ETF. These companies are all proven over a long period of time. QQQ is going to be great. This is going to be a very highly risky gamble to even put $1 into ARK ETF, okay? So I'm not touching this thing. So I believe that this is nothing but just a big conglomerate pump and dump that has a bunch of different pumped up, hyped up stocks that, that somehow, that she got all this airtime to hype up, and people bought this, based on all that hype, and they're gonna be let down. So, all right, I just hope y'all enjoyed this video, and please hit like and subscribe to my channel, and I will catch you on the next video. God bless.